Hi friends, last week I reviewed Interactive Brokers financials up until the final quarter of 2022, but guess what? They just released their Q1 2023 earnings report and their share price dropped by over 9% since then. So naturally, I had to investigate. I've gone through more than 30 pages of their earnings report and also call transcript to give you a quick summary of their business metrics, financial health, future plan and more. Let's dive into some key business metrics to see how they did in the quarter. First up, total customer accounts increased 21% year over year, or about 5% quarter over quarter to 2.2 million. This growth rate is consistent with the past 4 quarters, so they are still expanding their customer base at a steady pace. However, total customer DATs or daily active revenue trades decreased 19% year over year, or about 3.5% quarter over quarter, and this is very likely the reason why their share price took a hit, since brokers like Interactive Brokers are often judged based on this metric. I've double checked with their earnings call, but the management did not explain why their DAT dropped for the quarter, so I can only guess it's either because of the falling stock prices etc, which discourage investors and traders, or it could just be a mean reversion of the number. It's anyone guess why it happened. And on a brighter note, their margin loan balance increased slightly from the previous quarter, although it's still down 18% year over year. Lower margin loans means less margin interest income for their business, but it's understandable given the current market condition because people tend to be risk off in times of uncertainties. But surprisingly, despite the lower amount of trades and also lower margin loans, their brokerage commissions actually jumped substantially to $357 million for the quarter, and that is an 11% increase year over year, for which they claim that it is the second highest in their history. So that's a plus for them. And their net revenue also saw a substantial increase, growing 10% quarter over quarter, thanks to a combination of increasing interest income due to the high interest rates, as well as the increasing brokerage commissions that I've just mentioned. But the real focus is on their EPS, earnings per share, which reflects the efficiency of the company's management. The adjusted diluted EPS for this quarter stands at $1.35, and it is on an uptrend for the past few quarters. Good, right? But apparently that is not good enough for analysts because they estimated $1.40 for the EPS instead for the quarter. So that's also another reason why their stock price went down. Now let's take a look at their balance sheet. I won't repeat all the details from my earlier video, but I will highlight some important numbers that you should know. Their cash and cash equivalent actually declined about 6.5% quarter over quarter, but it's actually still 20% higher year over year, so nothing to worry here. And here's something pretty interesting. One of the analysts during the earnings call actually asked why Interactive Brokers have so much excess capital of $9 billion excess of the regulatory requirements, and wouldn't it be better to invest them to gain a high yield etc, like, you know, Silicon Valley Bank? And their chairman Thomas Peterffy actually laughed it off and said that very strange that you should ask that question at a time that many of our peers Charles Schwab appear to have insufficient amounts of capital. So no, we are very proud to have as much capital as we do, and we hope to keep growing it. And that, to me, ladies and gentlemen, that's a mic drop moment. That's actually a very big flex, and I'm very happy to see that as a client that trusts a huge part of my net worth on their platform. And after all, you can never be too safe, right? And before you ask me how about their bond losses, are they like Silicon Valley Bank and, you know, Signature Bank and whatnot? Well, happy to report that their mark-to-market losses on their investment is only $40 million for the quarter. And if you compare that to their excess capital of $9 billion, that's only about 0.5%, so very negligible amount. And their management also mentioned that by selling those bonds off, they effectively reduced their treasury maturity duration on the remaining portfolio down to 24 days only. That's extremely short, and safe to say you can totally ignore the possibility of a Silicon Valley Bank crash. That's borderline impossible. And overall, their balance sheet is solid and boring, which is exactly what you want. And by the way, here's a quick shout out to Seeking Alpha because I have been using them to obtain lots of useful financial data and also valuation ratios, which helped me a lot in the making of this video. And not to forget, access to their earnings transcript almost immediately after each quarterly earnings call, which helped a lot with my entire research and analysis process. And you can even compare companies against their competitors and peers across tons of metrics, which is very handy for any investor. investor and trader. And I'm happy to share that I'm working with Seeking Alpha to bring you a very exclusive deal where you can get their Seeking Alpha Premium for just $99 per year using my link down below instead of the usual $239, and that's a discount of 59% or $140 off exclusively for the audience of this channel. And plus, you will get a 7 days free trial, so feel free to give them a try. And hey, if you don't like it, they have a very simple refund policy. That's a win-win scenario for all parties, right? Now, putting their financials aside, there are 2 additional catalysts that I believe will positively impact Interactive Brokers over the next 6 to 9 months. Firstly, they are onboarding 2 large introducing broker, which is like an agent broker with more than 400,000 clients, and that's about 20% of their current customer base. So that's definitely going to increase their asset under management and also brokerage commissions, etc., which will definitely flow down towards their bottom line, and they hope to see it completed by the end of 2023. And catalyst number 2, we all know that the US CPI inflation has come down substantially, but is still hovering around the 5% mark, and many economists believe that it will remain elevated for quite some time. So guess what happens when inflation persists? Well, people have no choice but to start picking up investing or just looking for somewhere else to park their idle cash for higher yield, and naturally that will lead them towards investment brokers like Interactive Brokers themselves. That's all for now. I hope you enjoyed this short and sweet update on their Q1 earnings and also future plans. I will also share with you the links to these reading materials in the pinned comment down below, so feel free to check them out. And oh, while you're at it, you can also support my work for free by checking out my Interactive Brokers affiliate link down below as well. And in return, I promise to bring you more content on Interactive Brokers to keep you updated on everything IBKR. Thank you for watching, and as usual, I will see you in the next one.